Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 131. And in this week's video, what I'd like to do is give you some insights between investing versus gambling. And that is because so many people look at gambling the same thing as investing, or gambling the same thing as stock trading. So I want to compare these kinds of things for you, especially if you have family members or friends that are really, pushing one or the other, saying that investing is like gambling or stock trading is like gambling. I want to break these things apart so that way you understand the deeper meaning behind one or the other, because the definitions are very similar and they kind of overlap, and that's why they can be a little bit confusing. So let's take a look at these definitions first. So if we take a look at these two definitions, let's see how they overlap and also how they are different. Basically, investing is you put your money to use by purchasing or through expenditures in something offering a profitable return through interest or income. Okay? Whereas gambling, you're playing a game of chance for stakes. It's either to risk money or anything of value, in other words, to bet or wager. So you can see that in theory, there's quite a lot that overlaps, especially when you start looking at, you're looking for profit, okay? You're looking for anything of profit in a game of chance. So if I look at, let's just say, kind of a diagram, okay, and I'm looking to invest in, let's say, real estate, okay, buying a house, and I'm looking to rent out these houses and properties. So you could say that this is a game of chance, right? You're investing in real estate. It's a chance, because what if the house burns down? It's a chance that anything can really happen. I'm risking money or something of value in order to potentially profit at some time in the future, or in other words, collect interest or income. But it's also part chance. So it's kind of interesting that it overlaps because, for many people, they wouldn't say that real estate investing is gambling. And that is because they usually understand that a little bit more. Whereas, other people, they may say, especially if you don't understand what real estate investing is, they may look at it more as gambling. And oftentimes I find this is the case. And this is one of the main reasons why people will classify one thing of investing as far as gambling goes, and another thing as far as investing, or no, this is investing, or no, this is gambling. And it usually has to do with our knowledge or understanding. So if you don't know something, okay, so let's say right here, you're in the question mark area, this often is considered gambling because you don't understand it, because you're playing a game of chance. You don't understand the outcome. And the percentage of probability of your returns, what's going to happen in the future, is more likely you're going to lose, because when it comes to gambling, usually the house always has the odds, right? They have the odds in their favor. So when you are less knowledgeable about something, when you don't understand how something works, when your chance of success is lower, so let's just for discussion purposes say it's less than 50%. So let's say 49% chance or lower, then this is usually classified as gambling. On the other hand, if you look at something, let's just say that you do understand, okay, so now you know it, okay, you're a superstar, okay, and here you are, you're a genius, okay? If you know something and you understand it, this is usually called an investment, okay? Because you know how this works and operates. You know that, okay, if you start an internet business or an internet company, you're not really gambling on something, even though you are taking a chance on something. You're really considered investing in something. And this is how many people classify it. But if you're friends and family and they're talking about, hey, you're doing this stock trading thing, or you're doing, this stock market game or trading options, you're gambling. And oftentimes that's because they don't know what they're talking about, or they don't understand the business. Because if you take any kid or any person and you throw them into real estate investing or acquiring properties, more than likely they're kind of gambling their money. You could say it that way as well. But in reality, they have a possession. They own something. And this is one of the big differences behind gambling versus investing, is ownership. So when you have a problem with, let's say, your investment or with your item that you have, right? you actually have ownership when it comes to a real investment, okay? You have ownership stake in real estate. You have ownership stake even if it comes to stocks, okay? You own stocks, even in options. You may own options or you may have sold options, but you have some kind of stake in there in the sense of, whether you can liquidate part of it for even a fraction. Now, I know I say the word stakes, which can also be confusing because this is part of that definition, right? You have some kind of ownership stake right there. But ownership does not necessarily imply a game of chance, because when you look at ownership, okay, you can get out with, let's say, real estate, even if something disastrous happens. Let's say you bought a house for $200,000 or $500,000 or $5 million. Doesn't really matter. And let's say that house plummets and it goes down to, let's say, $50,000. Okay, at least you get out with something. Now, when you play a game of chance, eventually what happens there is you put in your, $20, and you either win. It's a win or loss scenario. And if you lose, you get out with nothing. If you win, well, you get out with something. But here, in this case, even if you lose, you still get out with something. And the same thing goes with the stock market. You still get out with something, okay? Whereas when you're playing a game of chance or gambling, you usually put your money in, whether that's blackjack, whether that's, craps, all the different slot machines. You put your money in there. You get out with usually nothing if you lose, and you get out with something if you win. But in real estate or coin investing, you look at automobile investing, you look at stock market, you look at options, you typically can get out a lot sooner or at any given point in time with something. You can cash out your real estate holdings and get out with some kind of portfolio within real estate or some kind of money. You can get out with stocks, and typically most stocks don't go to zero, especially if you're investing in big companies. So even if the stock was at 50 and you get out at 45, you might have taken a little bit of a loss, but you're not getting out at a full $0 loss like you would with gambling. And the same thing with options, whether you're buying spreads or you're selling option contracts. Even if they go against you, at least you could get out with something because you're seeing the movement and the motion. And in between during that transaction, you can simply just get out. So that's one of the main big differences, but there are a lot of other differences that I want to share with you. All right, so what I've done here is kind of created a few different little categories that we can discuss here regarding gambling and investing. And this hopefully will clear some things and concepts up between the similarities and the differences, because the overlap as far as the definition goes is quite similar, especially if you just don't understand what type of investing that you're getting into. So first things first, let's take a look at the major thing, which is the advantage. What happens when you're looking to gamble? Who has the advantage? Well, it's typically the house or the casino that has the advantage. Usually the casino is always in the favor of it's always winning, rather than the person who's doing any of the gambling. They're always the one at a loss. Now, in general, for you as an investor, it's usually who has the advantage there. It's usually you. Now, oftentimes, I would say if you're looking at the market or just trading, it's usually the market is always the one that's going to be winning out. But you get to choose which investments you get into. And that is because of the normal tendency or the normal trend, okay? This is why I say you are typically the one who has the advantage. Because in general, what's the normal trend of a stock? What is a stock? A stock is a company, right? So you're looking for the normal trend of a company to grow in the future, right? So anytime you're looking at a company, you're looking at that company to grow in the future because it's looking to grow either their customer base, their products, it's looking to evolve in the future. That's typically the normal process of a company. Whereas when you look at the normal trend, as you put money in, let's say, a slot machine, what's the normal tendency? Well, you put some money in, you lose some. You put some money in, you lose some. You put some money in, you lose some. And maybe eventually you get some. But overall, that trend is pretty much to the downside. And that's the normal trend. That's the normal tendency between gambling versus investing. So investing, typically you buy real estate property. The normal tendency is it's going to go up, through inflation, through just appreciation, it's going to go up. And the same thing with a stock. You typically buy a stock like a Tesla and Amazon. It typically appreciates with time, right? Because they're growing that company. And, so when we look at this, and you're looking at your investments, comparing it to gambling. The other thing is it's usually an emotional high. So if you're looking for gambling here, and we look at, let's say, emotions, most people get in it because of an emotional high, right? They go to the casino and they're looking for, again, they're losing money, and then eventually hoping to get that emotional high right there. I mean, it doesn't always happen, but that's what they're trying to do, is they're trying to get that emotional high. Whereas when it comes to investing, your basic emotions are flatlined or they're low. Okay, you're making trading decisions or investment decisions by clear-minded choices. You're at least hopefully doing things clear-minded. So you're making those decisions based on research, based on investigative things, based on your knowledge, based on those experiences that you have. And you're doing it with low emotional self because you're looking for, an investment at a systematic approach, right? So when you're looking at systems and rules, this is what you're trying to do. You have a systematic approach. Now, you could say some people who professionally gamble also have a systematic approach, but for the majority, most people do not have a system or approach when it comes to gambling. Most people don't. The professionals, they actually do. But when you're looking at investing, you're typically having a systematic approach, whether you want to buy one real estate property and then you have like a system in place saying, okay, I want to rent this out for 3 years, then I'm going to sell it, fix it up, and so on. So you kind of have like a plan in mind. Whereas with gambling, you don't usually go in with a plan. You go in with a few dollars, you put it in a casino, in a slot machine, you put it on the table, you go play some cards, you get that emotional high, and that's kind of the main thing with that. The other thing is oftentimes you're looking to chase the money, okay? You're looking to chase the money when it comes to gambling because, again, you're looking for that emotional high. When it comes to investing, you're not always chasing the money. Of course, you're looking to profit, but this is not usually the case when it comes to investing. Of course, you're looking for growth, you're looking for income, but you're not trying to make a quick buck, right? Usually a gambling mentality, oh, I need to make a quick buck. I need to make this work. And that's why you have those chronic gamblers that really keep losing more and more money because they're looking to chase the money. And then what happens is they go all in at times. And then they lose a lot of money, okay? So when they go all in, then they keep losing their money. Whereas with investing, usually you go in with a portion of your money, right? So let's say you have a portfolio account or like your total net worth is $1 million and you're looking to invest in some real estate property. You might only take, let's say, 20% of that money and invest it, right? You're not investing everything that you have, but you have a part of that money. Same thing with the stock trading account, right? So you have some trades, you usually have 4 or 5 different trades set up at once, and you're diversifying. So your risk is a little more defined or more specific, whereas with gambling, you put all your money in and you either have a win or lose outcome. Whereas here, when it comes to trading, you can usually take a part of that investment out. So even if that stock starts to go down, okay, even if it was, let's say, at $60, you might be able to get out at 40, okay? Even though it's $20 lower, it's a pretty good percentage of a pullback, but at least you get out with something. Whereas with gambling, you don't get out with anything. So in that case, in addition with going all in, you basically don't have any defined risk. So you're not defining anything. Whereas with investing, you're defining your risk. You're defining how much you're willing to put in, how much you're willing to, how much profit you're looking to make, how much money you have. So this is a lot more defined. It's more strategy based. Okay, so again, back to the systems, back to the rules. And a lot of times when people go all in with gambling, they also use margin. Now you could do this also in investing, but a lot of times people go on margin and collateral when it comes to gambling. So they really leverage up. It may even be on credit. Okay, it may even be on credit. Whereas with investing, usually you don't use margin. You can apply for a margin account, especially in stock trading. You can apply for a margin account, but you don't need to. You could have a cash account, and absolutely nothing wrong with that as well. And finally, the time frame. With investing, it's much more longer term, right? Because stocks appreciate, they take a bit of time, and you have strategy in place, okay? Whereas with gambling, you're looking for a high emotional value. So you're looking for a short term, right? And it's kind of an emotional gain or emotional high, just like we talked about right here. So since you're looking for that, the time frame is usually a lot shorter. Whereas with investing, it's a much longer time frame. It could be multiple years. It could be a decade, where you're really looking to capitalize on dividends or interest, or if you're trading options, at least it's a month. Whereas here it could be just for, an hour or a few minutes of an emotion. So these are kind of the main differences, and I hope it really shows you the difference between gambling versus investing. But ultimately, it comes down to understanding the business, because there's some people who, you could consider, when they play cards, even though for me this would be considered gambling, for them it's not a game where they're very emotional. It's not a game where they go all in. They have a strategy. They have an advantage because they know what they're doing. So ultimately, it comes down to your knowledge and experience. So thank you so much for joining me today. I hope you really enjoyed the lesson. Keep in mind the bigger picture behind gambling versus investing. It all comes down to risk management, understanding where you have the advantage, the knowledge, the insight. Do you have ownership in something? And most of the time, even if somebody's starting to mock you, make fun of you, thinking and telling you that, hey, stock trading, it's like gambling, you're just gambling. Oftentimes, if you look at them, they probably don't understand the business that they're talking about. They probably don't have the knowledge and understanding that you've put into this business, to learning and understanding how to invest or stock trade. So look at the bigger picture, understand what's going on and what's happening, and then make your own personal decision. Because definitions, they're just definitions. In the end, what is it that you want to do? Where do you want to be? How do you want to get there? And if it's, doing real estate, if that's what you do, then by all means take the real estate path. If it's through stock trading, by all means you can do it through stock trading. It's just different paths to get you to your destination. Look at that destination and follow that path and make adjustments as needed. So thanks again for joining me. In the end, remember to do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you in the next video. Oh, by the way, if you want to join me on a live class that I host, then go ahead, click this button right here. And when you click that button, enter your name and email address. And that's where I share some of the good stuff. And when you're on a live class with me, it's pretty much like getting a little mini group coaching session, because if you can ask me questions directly and I can answer them. So get on the newsletter list. That's where I share the live classes, when we have any free ones, some discounts to my products, along with my courses and books. So get on the newsletter list and click this link. See you there.